Hey everyone, thanks for joining us today. I'm Pat Larson, CEO of Zen Ledger, and joining us is Matt Walsh, co-founding partner at Castle Island Ventures. Matt, thanks for joining us.
Hey, thanks for having me on, Pat.
Matt, would you like to give a quick intro of yourself?
Sure. I'm Matt Walsh. I'm co-founder of Castle Island Ventures. We're an early stage fund focused on investing in blockchain infrastructure companies. We're on our third fund now, 4 general partners, 3 locations, Boston, New York, and Miami. And before this, I was at Fidelity, so working on a number of crypto R&D initiatives and eventually investing on Fidelity's behalf. So great to join you.
Awesome. I thought in this quick conversation, we could go from big to small in crypto. So based on the last year of tumultuous events in crypto and maybe like your experience looking at crypto over the last 5 years or more, how do you think things are shaping up from like the broadest kind of macro perspective globally and perhaps like in the US and in regulation, adoption, usage?
I mean, I think if you compare this to what it looked like when I started back in 2014, it's just unbelievable the amount of entrepreneurial interest and the amount of use cases that have popped up. So, back in 2014, it was just Bitcoin. This was before Ethereum had even existed. And so you had this non-sovereign money use case for crypto. Eventually, that obviously expanded, and now you have this just wealth of financial services use cases, a lot of things that have been built on alternative layer 1 blockchains that are powering DeFi applications. So you kind of went from this non-sovereign money to the DeFi use case, and then eventually into decentralized internet architecture, what people are calling Web3 has just become a real use case here, in the idea that you can use public blockchains to recreate some of the services that centralized intermediaries perform on the internet itself. And so now all of a sudden you have the money use case, you have the financial services use case, and then you have the internet itself as a target market. With the overlay, I should add, that stablecoins have come onto the scene and emerged as a killer app. And so now you have US dollars moving on these rails. And so just the target markets here, how big we thought this could be, I'd say it's a lot bigger. And some of the disruptive technologies that are being built, I think, are probably still 5 to 10 years out. But it's really encouraging to see the infrastructure being built for some of these use cases, outside of just Bitcoin.
Yeah. Do you think, I think the pattern of boom and bust for like, 2000s.com, 2008 great financial crisis, and maybe now in crypto is like a lot of heat and fire, a lot of capital comes in, and then a lot of asset destruction followed by regulation response. Do you think that's going to be the case now as well?
Yeah, I think the part you didn't add there was like a Bernie Madoff style Ponzi scheme sprinkled in there, which is obviously I'm referring to FTX. And so I think what we're seeing this year is obviously, there's an interest rate element to this. So risk assets have sold off across the board. So high growth tech stocks would fall into that category as well. And so crypto assets have been impacted by that. There's also just been this complete evaporation of the credit markets within crypto on the back of Alameda and FTX being a fraudulent Ponzi scheme. And so that has affected the market. And Silvergate obviously was banking some of these entities, but they were upright citizens, definitely a different category from FTX. But I think we're seeing just sort of the aftermath of FTX in this market, and you've had a lot of forced selling, a lot of funds that were impacted by this that had to sell, a lot of individuals that were upside down. And so it's natural, and these things happen in capital markets. And unfortunately, we're seeing the first one happen in the crypto markets.
Can you talk more about stablecoins and what has your interest there and how you think they're going to go going forward?
I mean, I think there's so many angles to stablecoins. One of probably the most disruptive things about cryptocurrencies and public blockchain networks, I think, happening right now is around stablecoins. And so the idea that as a citizen of a non-US country, you can actually hold dollars for the first time. So imagine trying to open a US bank account if you live in Turkey or Venezuela. It's just impossible. You really can't do it. And so you're forced to hold assets in these local fiat currencies that, might not have good property right guarantees. They might not have, they might be highly inflationary. And so what would you want to hold? Maybe you want to hold Bitcoin, but I'd say there's a better chance you'd want to hold the US dollar. And so being able to hold a dollar on a smartphone for the very first time, I think that's tremendously disruptive. I think it's also hugely advantageous to the US as just a geopolitical interest to have the dollar be more prevalent internationally, really cements the dollar as a global reserve asset. And so I think part of the uptick in stablecoins that we're seeing over the past couple of years is just people outside the United States seeing that this is a technology that allows them to hold their savings in dollars. And so that's just a killer use case. Now, there's all sorts of other really interesting things you can do with a dollar if it's fully digitized and can settle atomically in the capital market space. And so my expectation is that we see this stablecoin infrastructure being used for institutional payments, retail payments, decentralized finance use cases, you name it. I think moving blockchain based US dollars is really high interest to a lot of customers. So I'm really excited about it. I think it'll be really interesting to see how the regulatory landscape unfolds supporting this. I think it's, as I mentioned, I think it's really in the US's interest to have stablecoins be a huge part of this industry.
As a early stage investor, how are you thinking about the kinds of companies, themes, sectors that you want to invest in today?
Well, one of the things that we always think about is what are the categories that have to exist if you don't want to take necessarily a directional bet on a particular cryptocurrency. And so if you just believe that blockchain-based assets will be a thing, that public blockchains will be used to settle transactions, what has to be around? Things like tax prep would come to mind for that, right? So we're investors in Zen Ledger. It's not a directional bet on a particular cryptocurrency. I look at things like custody, things like trading technology, things like compliance software. Those tend to be where we spend a lot of our time, is just looking for those foundational elements. I mean, none of this stuff works without tax software. Is kind of a sleepy, boring topic maybe for some, but you legitimately cannot run a business without paying your taxes. And so you can say the same thing for trade execution. You can say the same thing for custody. And so those tend to be where we spend most of our time.
Do you have any advice for individual investors that have just, kind of feel like they maybe are still in the drying machine getting tossed around, and how they should think about things in kind of like the near and medium term?
I think it's always, I never recommend to someone just hop in and buy cryptocurrencies. I think that's generally just a recipe for failure. And the ICO craze would probably point to that. And I think some of the hysteria that we saw over the past year would also point to that. I think it's really the best investment is actually just education. And so when I first started, it was just sitting down and really trying to understand what is Bitcoin. And I spent countless hours just pondering the literature and reading the Reddit forums at the time, trying to figure out what this was before I decided that it was something that I'd want to hold personally. And so, I think that's always the best path to do it. Hopping into these longer tail coins, I think, is generally just a recipe for disaster. And if it's something that you can't get on a regulated US venue, it's probably not something that is in your best interest to hold in the first place, is my opinion.
I think another thing that's been validated over the last couple of years is that humanity loves the casino, right? Loves gambling, loves sports betting, loves US stock betting, loves crypto betting. I think that is also a theme that seems to have played out again and again.
Yeah, I mean, I think speculation definitely plays a factor in all sorts of technology advances, right? I think that you could trace that back to the earliest forms of technology around just exploration of the world. And so the speculation on, people going to new continents and discovering new minerals and things like that. Certainly you saw that in the internet era, where the speculation got way ahead of the technology, and it took a few years for the technology to catch up. And we'll go through those cycles, to be sure, in crypto. We've gone through them, already, right? So you remember when Bitcoin ran up to $20,000 in 2017, had a big pullback to 3,500 and kind of slowly rebuilt. So I think this technology is no different from any other disruptive technology, in the sense that speculation will outpace at certain points what's actually happening on the ground. But then you get yourself in these bear markets where the technology just really catches up. And so all of the tourists sort of disappear. It feels to me like we're in one of those phases right now, where most of the kind of media attention might have pivoted to AI and is not focused on crypto as much anymore. And really, that's when you see the real builders in this industry. I mean, we invested in Zen Ledger, I think, during a similar bear market, right back in 2018, when a lot of people had sort of decided not to look at the space anymore. And I think that's generally where you see the best companies built, is during those bear markets.
Yeah, I think in the end, your startup or your blockchain or your token needs to deliver real value to people, and certainly you see that validated in some of the major tokens and in stable coins now. Like it's even remittances. Before, 50% of your remittance would get back to your family in some country. Now 99.5% of that remittance can get there, and you don't have to change money locally. You can spend Bitcoin or the stable coin locally in your country.
Right.
That
Yeah, I
in
think
and of
that's a great
itself
use
is like
case.
a Western Union or international finance, right?
Yeah. Yeah, that's a great use case. And sure, we're seeing a lot of attention there. If you actually look at the dominant asset on some of these African crypto brokerages, you would think it would be something like Bitcoin or Ethereum, but it's actually Tether. And so the demand to just hold a stable coin, even one that might not have great guarantees from a kind of an operational soundness perspective, it's a very strong demand to hold dollars. And so I find that to be very interesting.
Yeah. So we're coming up on time here. Thank you so much for taking the time to chat. Are there any other parting ideas, thoughts, or questions you want to leave us with?
Yeah, I mean, I think the big thing that I'm looking at right now is just the regulatory landscape. I think if you were to ask me what the wish list would be, it would be that we would get some legislation around stablecoins and just codify how stablecoins can be issued, what type of institutions can issue them. And then I think we'd be really off to the races for that category. The second thing I'm really zoned in on is just the market structure for crypto assets. And so getting regulatory clarity on whether or not it's the SEC or the CFTC that has oversight of the crypto commodity spot market. I think getting some clarity on that issue and the definition of some of these tokens, whether they're securities or whether they're commodities, that would be in the best interest of the US government and just the industry at large, is to just codify what that needs to look like. That's the type of thing that could be similar to the Telecommunications Act of 1996, if you want to use the internet analogy. Just clear rules of the road that would allow capital to form at a much more aggressive clip. And so if we are to get something like that, I think it's really off to the races here as an industry.
Yeah, I do think so. I think regulation and clarity in stablecoins, and then eventual competition among stablecoins of dollar, euro, and China or whoever else would be an incredibly interesting time.
I think so.
Yeah. Boston Bruins versus the Field. Who are you taking?
I'm taking the Bruins. I'm also taking the Celtics, the Patriots, and the Red Sox this year.
Every year.
Every year. But the
Bruins
look like a wagon. So thanks for having me on.
Fantastic. All right. Thank you.